Oh, and a reminder, remember how the growth stock sell-off started a long time ago, back in November? Do you know that Netflix traded as high as 700 back then? This company with huge pricing power and a full set of content coming out post-COVID had a stock down 50% at its lows last week. 50%, that was cut in half. What else? Just when we thought that the bulls had deserted Tesla, we got a new convert, Credit Suisse. Incredibly thoughtful piece about how Tesla's still the real winner in what could arguably call the newest industrial revolution, the end of the internal combustion engine and the rise of electric vehicles. Great hold to buy. And what may have been the exact bottom of growth, perhaps the appearance this very morning, on Squawk Box, of Matthew Tuttle, the creative guy who fathered an ETF that bets against Cathie Wood, or Woods, as he called her, with a fund that had gained 61% since the peak of growth investing in November. Bulls make money, bears make money, but pigs, slaughtered. How long can this growth rebound rally last? Arguably, as long as value stocks have to deal with supply chain, semiconductors, and COVID worries, they remain naughty. Plus, there's been a virtual shutdown of the IPO pipeline, which was filled with all sorts of software as a service analytics companies that save time and labor with real-time dashboarding and great onboarding. SPACs, they're now being bashed left and right as wastes of our money. Take away the new supply of bad growth that makes nothing, Gresham's Law, or sells next to nothing, and the real growth stocks can shine. Now, I've never been a true believer in this growth versus value dichotomy. I prefer to look for quality companies with great management, regardless of which category they belong to. I don't want companies that make excuses, even when those excuses make sense. Anything that results in a number cut is a nightmare. Beat and raise will always take precedence for me. I want companies that make things and make a lot of money doing so. At this point, there's so much money invested in value stocks that it won't be an overnight shift. And I'm sure some industrials have been able to overcome the problems. Otis Elevator had no supply chain or semiconductor issues. They reported some numbers today that were initially looked down upon because of some Chinese order weakness, but then the stock snapped right back. I think that's because it didn't have these curses. But I'm betting that's a rarity. Meanwhile, two big semis, Cirrus Logic and NXPI, both reported fantastic quarters tonight. Unlike 3 weeks ago, these were immediately greeted with higher prices in the aftermarket. The bottom line, if you want a value stock here, pick one where we know there aren't any supply chain, semiconductor, or COVID woes. Otherwise, it's going to be tough.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.